So the Federal Reserve is about to cut rates for the first time this year on the next meeting that is scheduled on September 17th. Historically, after every rate cut, the market crashes, and it crashes by a lot. I will explain this insane graph in this episode that shows the historic performance of stocks after rate cuts back in 1995, 2001, 2007, and 2019. This will give us some prediction of what will happen to the stocks when the September rate cut happens. Let's move to our next question. I will also explain if there will be a crash this time. Before I reveal the truth, let's see what Wall Street thinks. So Wall Street analysts think that the market will boom. Take a listen to Tom Lee, who is the head of research of Fundstrat Global Advisor.
All right, we need to make some news here, Tom. Everyone listens to you. We're at record highs now for the S&P and the Dow. How much more can these stocks rally?
I think there's a lot of upside, especially because, once you get an ISM back above 50, it really does argue for a broadening of markets. And I think one of the leaders probably comes from the financial sector. So I think, towards the end of the year, 6,800, 7,000 is possible.
Led by tech still?
Yeah, so I think you still want to play
this week.
Yeah, you want to be long AI and the crypto trade because those have been the market leaders. So the Mag 7, Bitcoin, Ethereum. But the broadening is really the financials, industrials, and small caps.
Not only Tom Lee, but so many friends advise me to buy stock right before rate cuts, which is now, as they think the market will boom, to the point that one of my friends took a loan to invest. The question is it really a good time to buy now, or the market will follow its historic path and crash right after buying? I will reveal the truth in this episode. My name is Mohammed. I started investing 6 years ago when I took a huge hit and lost all my money on crypto because I was buying meme coins hoping they will be the next Bitcoin like everyone else. I learned my lesson the hard way. In the year 2020, I started investing instead of gambling. I started buying value stocks at good times and analyze undervalued stocks, and that's when I doubled my money in 2021. And in 2022, I bought these stocks at these prices and doubled my money again by 2024. I went from 5 figures to 6 figures in only 4 years. And now I bought these stocks at these prices as I think they will double in the next 3 years. The mission of this channel is to hit our first $1 million together. I'll be sharing what stocks I buy in the upcoming days, and I will give you a weekly update about my portfolio. So currently I'm sitting at $213,000. Now let's start. So will history repeat itself and market crash right after rate cuts? What everyone knows is that rate cuts means cheaper borrowing costs for companies and individuals like you and me. That means more money for companies to borrow and expand their businesses, and more money for individuals like you and me to buy more stuff. This should make the market thrive. Not only this, but also people should take their money out of the bonds as the yield is lower now and put their money back into stocks for better returns. After all that, stocks should rally and the S&P 500 will hit a new all-time high of 6,600 to 7,000. Great scenario, right? That's not what I think, but this is what Wall Street analysts think. But what people don't know is cutting rates usually a signal from the Federal Reserve that the economy is weakening. That means that we have soft job reports and the growth is slowing, and that's when the market may sell off. Cutting too soon could reignite inflation, especially that tariffs has already increased the prices of goods. This could backfire and force the Fed to hike rates again later, but this time aggressively. That's why Warren Buffett is selling many of his stocks. Take a listen to what he said about this.
Interest rates are to asset prices, sort of like gravity is to the apple. When there are very low interest rates, there's a very small gravitational pull on asset prices. And we have seen that getting played out. I mean, people make different decisions when they can borrow money for practically nothing than they made back in 1981 and 2 when Volcker was trying to stem inflation and the government bond rates got up to 15%. So interest rates power everything in the economic universe, and they have some effect on the decisions we make.
Now take a look at this insane graph that I talked about in the beginning of this episode that shows the returns of S&P 500 after 1 year of Fed rate cuts. So let's look at 1995, which is representing the orange line. Look at the orange line only. So after the first rate cut, the S&P 500 did not move by anything. But after 3 months, you can see the S&P 500 returned 5%. And after 6 months, it increased to 11% returns. And then after 12 months, it gave us around 18.7% of returns. So this is a positive return in 1995. But let's look at 2001. Here's the story changes. After the first month, usually nothing happens. But after 3 months of the first rate cut, the S&P 500 dropped by 18%. That is a lot. And after 6 months, it kind of corrected a little bit, so it went up. So now we lost only 8.4%. And by the end of the year, the S&P 500 dropped by 13.5%. Now let's look at 2007. So we have now one positive example with 18% return after 12 months, which is 1995. And then 2001, which is the blue line, we can see it dropping 13.5%. Now let's look at 2007, which is representing the green line. Look at the green line. So the first month, nothing has changed as usually. After 3 months, the S&P 500 dropped by 4.3%, which is the y-axis. And then after 6 months, the S&P 500 dropped even more to 12.4% decrease. And then after 12 months, the S&P 500 dropped by 20.6%. So this is insane. So we have 2001 and 2007. Those are really bad examples. When the Fed rate cuts, they cut the rates. S&P 500 dropped by a lot. The only good example is 1995. Now let's look at the last example, which is the most recent one, which is 2019. After the first rate cut, the first month nothing happened, but after 3 months, the S&P 500 actually increased by 4%, and after 6 months, the S&P 500 increased by 9.2%, and after a year, it increased by 10.8%. So we have another good example. So 2 positive returns and 2 negative returns after the first rate cut. Well, first of all, stocks cannot be judged based on historical information. This is number one. Second thing, I will give you my honest opinion right now for the upcoming rate cut and what's going to happen. First of all, no one can predict the market. Not me, not your friend that tells you buy stocks now, but I can give you a scenario that is close to reality, and I think it is most likely to happen. Listen, if the Fed rate cuts because inflation is under control, but they only want to reduce government debt as what Donald Trump demanded, because the US is currently paying hundreds of billions in annual interest on its $34 trillion debt, so low rates would save the US government trillions over time. If this is the case, then the market will rally. However, if the Fed is cutting rates because the market is crashing or will crash soon, that means the market will crash because huge sell-offs will start. In our case today, I don't think the Fed is cutting rates because the market is crashing or will crash soon. I think the Fed is cutting rates because the labor market is slowing down with the unemployment rate ticking up. The other reason is lowering the US debt by lowering the Treasury interest cost. Also, the rate is too high, so there is room to lower rates a bit. If you ask me, is the Fed going to lower the rate to 0? I would say I don't think so, because the inflation is still above 2%. Also, cutting rates too fast could reignite inflation, so the Fed will lower rates slowly. By that, I think I answered all the question, and I gave my honest opinion, as I think this is what I cannot predict anything, but I think I gave you the closest to reality scenario. I could be wrong. Nobody knows how the stock market will move, but I think this is the most likely to happen. If you think you learned something new, please give this video a like, as it will help the channel a lot. Also, if you want to see my journey to hit the $1 million and what stocks will help me to get there, please subscribe. Watch this video where I talked about Nvidia stock and I answered the questions if Nvidia will be the next Apple or the next bubble. especially after tech giants like Google, Amazon, Meta started developing their own chips.